The housing market is about to change dramatically. This is what we can expect from the 2025 housing market and how you can protect yourself from making costly mistakes. Welcome back to our channel, where we educate you on all things real estate investing and personal finance. Now we've been discussing the upcoming crash in the housing market, and while it's true that housing prices will go down, it doesn't mean they will crash. So let's talk about that. If you want to stay up to date on the latest news, continue watching. Housing markets are cyclical by nature. They go through peaks and troughs just like breathing. When the economy is booming, people have more money, and the demand for housing is high, prices go up. But when times get tough, people tighten their belts, and the demand for housing falls and prices go down. And right now, the market is at a low point in its cycle. But here's the good news. This is a great opportunity for those who know how to navigate it. So how can you make sure you don't lose your mind in the process? Let's take a look at a few strategies you can employ to keep your cool and come out ahead when the market recovers. First, understand the market fluctuations. It is important to remember that real estate is a long-term game. Don't panic if the value of your investment property drops because of a temporary downturn in the market. In fact, it is normal and to be expected. Just think back to the 2008 financial crisis. Housing prices dropped by almost 30% nationally, and even longer in some areas. But since then, the market has recovered and prices have risen to new highs. This is just one example of how the real estate market fluctuates over time. Second, don't try to time the market. Trying to time the market is like trying to catch a wave. You never know when it's going to come or when it's going to break. Timing the market is very difficult, even for experienced investors. So instead of worrying about when prices will rise, focus on finding a good deal and making a sound investment. This means doing your research, understanding the local market, and being patient. Third, diversify your investments. One of the best ways to protect yourself from the ups and downs of the housing market is to diversify your investments. This means that instead of putting all of your eggs in one basket, spread them out across different types of properties, locations, and price points. That way, if one part of the market goes down, you'll still have other investments that are doing well. For example, you could invest in a rental property, a vacation rental, a house hack, and a piece of land. You could also look into investing in REITs, or real estate investment trusts. They allow you to own a piece of multiple properties without having to manage them yourself. And they often offer a steady stream of income. Plus, REITs are publicly traded companies, which means their shares can be bought and sold easily on the stock market. Fourth, be prepared to hold on to your investments for the long term. The key to success in real estate investing is being patient and holding on to your investments for the long term. It may take some time for the market to recover, but if you don't panic and sell, you'll be able to ride out the storm and come out ahead. This also means that you need to be financially prepared to weather any unexpected expenses that may arise. Things like repairs, vacancies, or legal issues can quickly drain your resources if you're not careful. So make sure you have enough cash on hand to cover these costs. Additionally, consider getting a backup plan in place just in case things get really bad. This could involve selling some of your other assets or taking on a part-time job. The most important thing is that you don't let yourself get desperate. Stay calm and rational, and you'll be able to make the best decisions for you and your family. Fifth, keep learning and stay informed. The key to success in anything is knowledge. By staying informed and continuing to learn, you'll be able to make smarter decisions and protect yourself from the worst of the market downturns. There are a number of ways you can do this. Read books and articles about real estate investing. Attend seminars and workshops, and network with other investors. One of the best places to start is the Bigger Pockets website and forum. They have a ton of helpful information, and connecting with other investors is invaluable. Next, don't let your emotions get the better of you. Fear and greed are two of the most powerful emotions, and they can easily cloud your judgment. Fear can cause you to make rash decisions that you'll later regret, while greed can cause you to overpay for an investment property in hopes of making a quick buck. The best way to avoid this is to develop a plan and stick to it no matter what the market is doing. Do your research, get pre-approved for a mortgage, and be prepared to make an offer when you find the right property. Then once you have an offer accepted, don't be afraid to walk away from the deal if the terms aren't favorable. It's better to be patient and wait for the right opportunity than to jump at the first one that comes along. Remember, the key is to stay level-headed and make rational decisions. Don't let fear or greed dictate your actions. With a little bit of planning and discipline, you can protect yourself from the worst of the market and come out ahead when things eventually recover. Finally, don't forget about the power of compounding interest. Compounding interest is one of the most powerful forces in the universe. It can either work for you or against you. When you're buying an investment property with a mortgage, the interest rate you get will determine how much you pay each month and how much you pay over the life of the loan. So if you can lock in a low interest rate, it will save you a lot of money. But it's not just about saving money. A low interest rate will also make your investment property more affordable, which means you'll be able to generate more income right off the bat. Plus, if you're able to negotiate a low purchase price, you'll increase your chances of making a profit, even if the market takes a downturn. So don't overlook the importance of getting a great deal on your mortgage. It could make all the difference in protecting your investment during tough times. As we wrap up our discussion on how to navigate the 2025 housing market without losing your mind, let's take a moment to recap the key takeaways. Firstly, understand that market fluctuations are normal and to be expected. Real estate is a long-term game, and short-term dips should not cause you to panic. Secondly, don't try to time the market. Instead of worrying about when prices will rise, focus on finding a good deal and making a sound investment. Thirdly, diversify your investments. This will help you to protect yourself from the ups and downs of the market. Fourthly, be prepared to hold on to your investments for the long term. The key to success in real estate investing is patience. Fifthly, keep learning and stay informed. Knowledge is power, and staying up to date on market trends and investing strategies will help you make better decisions. Finally, don't let your emotions get the better of you. Fear and greed can cloud your judgment, so stay level-headed and make rational decisions. Lastly, don't overlook the power of compounding interest. A low interest rate on your mortgage can save you a lot of money and make your investment property more affordable. By following these tips, you can put yourself in a strong position to succeed in the 2025 housing market and beyond. We hope this video has been helpful and informative. If you enjoyed it, please don't forget to like and subscribe. And feel free to leave a comment below with any questions or thoughts you have. Thanks for watching, and we look forward to seeing you in our next video.